Credit Suisse hitting a new record low this morning after its biggest banker, the Saudi National Bank, ruled out providing any more funding. In an interview with Bloomberg, the Saudi National Bank chairman said, quote, "We now own 9.8% of the bank. If we go above 10%, all kinds of new rules kick in, whether it be by our regulator or the European regulator or the Swiss regulator. We're not inclined to get into a new regulatory regime." Martin, can you help us better understand what exactly is going on here?
This is a great story, if for no other reason, JD, that it illustrates the chaos that often comes as a result of a lack of confidence in the banking sector. Really, this wasn't particularly an important event on the calendar for a lot of people who look at the European banking sector, or indeed who follow Credit Suisse, because they are well into their turnaround plan, and for the most part, the worst of their situation, I wouldn't necessarily say is behind them, but has been flagged in headlines and in financial markets for a number of months now. So what you have is a banking congress that took place in Riyadh. There were a bunch of executives on stage who were talking about Credit Suisse and the European banking sector in general. And indeed, the Saudi National Bank chairman spoke on Bloomberg television and was just asked kind of a relatively straightforward question about whether they wanted to boost their equity stake in case Credit Suisse were to make an equity call. Credit Suisse hasn't talked about making an equity call. It's just something that was sort of dreamed up as part of the conversation. Credit Suisse says it's well capitalized, and the numbers bear that out. Its liquidity ratio is about 144%, and that's incredibly strong, even by the European context. So the idea of it raising capital was a bit of a non sequitur, and as a result, the Swiss National Bank chairman answered it as such. But because people are so sensitive to headline risk and, of course, the associated spillover of SVB, they marked down Credit Suisse very, very quickly. Its credit default swap prices went through the roof. The stock traded at a record low, and European banks were pulled down into the vortex. So again, just another perfect example of something that wasn't necessarily a specific event risk, but spilled into the situation we see now, more as a result of confidence than fundamentals.